bet on American exceptionalism, but not just because of AI. I want to bring in Trader Ray co-founder Ayesha. And Ayesha, one thing that you note is that companies, they plan to surge, right, their onshoring. And I just want to show the audience, 2022, there was a 63% increase in companies that say, hey, we're going to bring some of the supply chain closer, right? Onshore, reshore, same thing with manufacturing and so forth. This year, 81%. You say this is going to continue and that we somehow, investors should have exposure, right?
That's right. Hi, Charles. Thank you for having me back. So yes, we think this is a very exciting time for us ahead because we're finally going to see the market broaden out, as your previous guest noted as well. And I think we've been seeing this trend start in 2024. We've seen PMI start to go up, and we've seen improvement in investor sentiment towards these companies, right, with the broadening out of the trade. We've also seen upward revisions in earnings growth for next year. So I think all in all, this is going to be a very interesting space. The reshoring beneficiaries, they'll benefit from fiscal spending, from deregulation, and possibly even exemptions to, some of the more adverse policies that everybody's talking about.
So the other things, though, that you wrote about, I find interesting with respect to investing in U.S. stocks. You say as you do that, you want less exposure to wage growth, less exposure to the strong dollar, and more exposure to higher long-term yields. How do you find that? How do you narrow that down to? What does that look like?
So I think for long-term yields, we'd like exposure to utilities. That's one, and insurance, financials. So those kind of companies. We'd like to see companies who have, less exposure. About 60% of the S&P has exposure to, overseas operations. So it's not very hard to pick those out. And we're not saying avoid them completely. Obviously, there will be growth there. But what we're saying is just be careful where these things are, affect the companies more than others.
Hey, I want to go over some of the stock picks that you have here. Block, Abercrombie & Fitch, and Americold Realty. Cold is a symbol. I always get a little nervous when the symbol makes up a word, but beyond that, I never heard of this company. Tell us about it.
So they're a logistics company, and basically they do a lot of refrigerated logistics. Now, with the nearshoring or the reshoring play coming into focus, what we think is that we're going to have a lot of logistics and rails and, cooling requirements within the U.S. And they own some really good assets. They're also actively expanding their capabilities. And so far, they've actually shown really good resilience with, double-digit growth. So all in all, we think this could be a very interesting play. They are a REIT, and it could be a very interesting play going forward.
Also, again, people maybe start coming out of money markets looking for yield. These REITs could get hot again on that as well. Ayesha, thank you very much. Appreciate it.
Thank you.